Thanks a lot for joining me on this Monday afternoon market recap. As I sit down and bring you this recording, there is about 30 minutes left in today's session. However, I do believe overwhelmingly we can at least conclude that the market itself is still continuing very much so, very strongly, very resiliently to the upside. What I'll do is I'll recap the three US financial market indices. What I will not do in this video is recap our top 12 individual trade list. Overwhelmingly, however, I can say that the majority of those stocks are participating in this continued upward move that we're seeing in the overall market indices. Understanding, of course, that if you pick the direction right in the overall market, you are going to find that the majority of those stocks that you are trading, directionally speaking, as long as those are aligned, are also going to work in your favor. And that very much, of course, extends to our top 12 individual trade list on the left-hand side of my screen. Before I move into the analysis, though, however, I just wanted to say that at the moment, currently, and really over the past 3 or so weeks, we have been, or at least I have engaged that of a web designer to actually update the Pivot Point Trading website. I am hopeful that that will launch actually this coming Wednesday. So I would say if you are listening to this analysis for the first time, I'd encourage you not to actually create an account. Don't sign up at the moment. All right, wait for later in the week, or at least wait till the weekend in that pro analysis class to actually create an account, or at least if you are a returning person, maybe recreate another account, and you'll see that it is a lot more accessible, a lot more easier to actually function, or at least to move around the website. And I do think it is going to be tremendously valuable for both new and returning students. So I just wanted to update you on that. Hopefully it will launch this coming Wednesday. Fingers crossed, that's what I've been told. So we'll just see how that plays out. Now, getting back into the analysis itself, this is the chart of the S&P 500. As I said, there's about 30 minutes left in today's session. Currently sits, the S&P itself is up 0.8, that's meant to say 0.8%. The NASDAQ is up pretty much 1%. The Dows are, somewhere in between those two. So again, overwhelmingly, we can say that really since this measured move, if I can zoom on out and show you this, the S&P hit that twice last week on Thursday and Friday. This, of course, is the ascending triangle pattern that we were referencing really from August onwards, before and up until we broke out in the period of October. What we did is we measured this first range over here. We projected it. If I can color coordinate this, I'll turn this blue from this sort of blue cross on my screen. We levied it up or extended it, and we got the target of 3,175 points. Again, just to repeat myself, we hit that on Thursday and Friday last week. Again, a lot of people in SPY positions are doing absolutely brilliantly, and I'm very happy for you. Pardon me on behalf of that. However, you can see here that the S&P 500 has just simply blown through this first target. Now, the reason for that, as we spoke about over the weekend, is because the NASDAQ, if you wanted to take this symmetrical triangle, a little bit of a variation to that of the ascending triangle that I just referenced on the S&P 500. Again, you can see this downward sloping resistance line. You can see this upward sloping support line. Again, in the period of October, if I can color coordinate this, we've got this blue cross signifying that of the breakout. And if you wanted to extend this, what I should have done is actually squeezed my price panel down. But what I'll do for you right now is that if you look at the blue line on my screen, the measured move, or at least the projected target, is up here at 8,900 points. Now, again, if you wanted to use the theory, so to speak, of the magnet sort of pulling price upward, not in this instance to actually close an open window, but more so to that psychological round number of 9,000 points. Well, even as at, or if we do close at 8,820, give or take a couple of points where we're currently trading at on the NASDAQ, we're still looking at this market itself moving a further 180 points to the upside to tag, right, this 9,000 target on the NASDAQ. Again, you can intertwine this into a Q play, not only to 9,000, but if you wanted to extend this really far out into 2020, it makes a lot of sense to me, as I shared with a lot of people or everyone in that pro analysis class over the weekend. You should start to begin thinking about the NASDAQ hitting 10,000 points. I do believe, and I will say it here in this public forum, that the NASDAQ, I believe, by 2020 or the calendar end of 2020, I do think we will see the Qs or the NASDAQ itself up towards 10,000, if not maybe even above that. So again, if you wanted to intertwine longer term option contracts into the Qs, and if you can sit through, again, what I call speed bumps along the way, the speed bump most recently was very early on in the beginning of December, whereby you see a natural pullback. Where to? right into, of course, the rising exponential moving averages. Okay, if you can just simply sit through that and not buy into, of course, the negativity and sometimes a little bit of the panic that sometimes engulfs the market during these very brief pullbacks, I think you're going to do very well into 2020. At the moment, the markets are humming along quite well. And again, what I wanted to reference really quickly in this video is not necessarily that of the oscillators. Naturally, these are going to be overbought, all right? As we've broken out of this symmetrical triangle on the NASDAQ and, of course, the ascending triangle on the S&P 500, you're going to notice that as price action continues to trend, that the oscillators are going to be up in that overbought setting. Now, again, for a green trader or a novice trader, someone who's relatively new to the market, they'll look at the oscillators and they'll say, oh, they're overbought. Maybe they're going to snap back and go through an adjustment. Well, not necessarily. Not in this type of context, not in this type of sort of market environment that we find ourselves operating within. What you need to be more focused upon, and really this is where I guess the golden nugget, if there's any wisdom that I can impart on you here in this public forum, it is as follows, okay? So what's going to happen most likely is that the NASDAQ is going to push up to 89. We're already within a stone's throw, 80 points away. At the moment, we're up 84 given today's session. So again, another repeat of today, and we'll be up at 8,900 points. I think we're going to blow above it. I think we're going to come up and tag 9,000 points. That is that psychological round number. And if the NASDAQ does this, okay, you're going to want to pay attention to this ADX. The ADX is going to continue to rise. It's going to come on back up, probably close to 50. But when this ADX signal turns down, all right, you need to focus on the ADX in this context. When the ADX signal turns down and when the NASDAQ gets on up and tags 9,000 points, that is going to be a tremendous opportunity, in my opinion. Of course, it's different for everyone else, and obviously, subjectively, you need to manage your own open positions. But I think there is a very high degree of probability that the market itself is not only going to stop definitively, pause on an intermediate time frame, understanding that there are three levels to the trend. There's the minor, the intermediate, and the macro time frame. Obviously, at the moment, all three of these time frames, according to Dow theory, are working very much in synchronicity with each other, and that, of course, leads to higher prices. But once we get into an intermediate top on the market, whereby we see the NASDAQ tag 9,000, we see the ADX up at 50, and then we see it turn down, that is going to be a signal that potentially for a number of months, the market itself is going to move into a natural correction. The correction itself is going to show up in a number of ways. It could even just be simply a sideways move. But I think in this context, given the run that we have been on since October, here we are pretty much almost the midpoint, right? Just overshooting the midpoint of December. Makes a lot of sense to me that if we are going to remain level-headed about this market, it makes sense that there is going to be some form, even if you wanted to bring up Fibonacci retracement ratios, right? The 0.382, the 0.5, the 0.618, a portion of this breakout going back to say 8,100 up to the measured move of 9,000, call that 900 points, okay, that we've been on a sort of a mammoth run on. A portion of this 900 point move is going to be given back. Now, I will say that this 900 point move, upon the pullback, it's not going to be forever. It's only going to be temporary, but it gives you an opportunity, right, to actually liquidate some of these positions up and around these higher levels, right, anticipating the intermediate pullback, the intermediate correction, whereby you can take the profit, put it in your back pocket, and then upon the market pullback and the resetting of the ADX coming back down to the resting 20 area, right, it's going to give you an opportunity to rebuy this market back down at lower prices in anticipation for ultimately the turnaround, that next subsequent higher low on the intermediate time frame, and overall the continuation of the market, as I was alluding to earlier, for the NASDAQ moving upwards towards 10,000 points. So again, this is, it's very much present to what we're currently dealing in, but also I'm taking, or at least I'm trying to give you an extended view of the market as we transition into 2020. So I hope that makes sense. All right, in this video, I will say also that personally, I'm leaving for vacation this coming Sunday. All right, so this coming class, or at least this Saturday's Pivot Point Pro, is going to be the final pro for 2019. I will be away for 2 consecutive pros into the second week of January. Let me just get my dates right. The first pro class that I'll be back for will be Saturday the 11th. So write this down. Saturday, the 11th of January will be, I'll just write JAN, will be the first pro class for the year 2020. And then again, everything will be business as usual as we progress further into 2020. So there is going to be a break for me from the 23rd, essentially, through to the 11th, which will really encompass two Saturday classes. I just wanted to point that out there. So here on the YouTube channel, hopefully you've listened through the majority of this video and you're obviously hearing me speak to you at the moment. I just wanted to throw that out there. And really the reason for talking through the markets in this context and giving you that sort of broader or at least deeper or sort of further view into the market is to at least help you in anticipation of probably that 2-week window whereby you simply won't hear my voice, okay, over Christmas and also New Year. So I wanted to say that's going to do us for this Monday afternoon market recap. If you have any questions, email me success@pivotpoint-trading.com. Otherwise, I'd encourage you to jump into the website probably this weekend if you're a potential new user or if you're interested in the application of technical analysis to the financial markets. Just allow that the site actually to come up and to go live, and then everything will be standard. If you are an existing user, I've been assured that the transition is going to be all okay. So if you've got a regular account that you're signing into, hopefully that pulls over to the new site, or at least the updated site, and it should just be functioning better than what it currently is for you, right? There shouldn't be any issues or any problems, but if there is, email me. I'll have my phone handy, as I always do as well. All right, so on that note, everyone, I'm going to say farewell to you on this Monday afternoon market recap. I wanted to wish you all a happy festive season. Obviously, I'll be back in the week and I'll talk to you more about that. But just enjoy your Monday evening and soak up this mammoth bull market continuation that we are in the midst of. Understanding, of course, that there is going to come a point in time whereby we see that intermediate top on the markets. That intermediate top, I believe, is going to be somewhere between 8,900 and 9,000 points. So you can essentially draw in this red sort of rectangular box on your trading screens. You can call it the radioactive zone, is what I generally do. And this is going to be a complete blanket of any trades that you may be wanting to place. Don't do it. Don't pull the trigger, because there is going to come a point probably soon after whereby the ADX turns down. You see the markets actually move into more of a definitive reset, right? Much deeper than what we saw for the first 2 trading sessions anyway of the current month that we are in December. So on that note, I'm going to say farewell to you. Enjoy your Monday evening, everyone, and I'll be back in due course. All the best. Farewell.